Trading was hard until I found this easy order block strategy. For 2 years I was struggling, so I was completely lost, I was losing trades, money, and I wanted to quit. I tried every single indicator out there, and I was constantly looking for that holy grail strategy, but nothing worked. I was in an endless cycle of frustration, but luckily then I found about order blocks in the markets. Nowadays I make over $1,000 a day. Literally yesterday I had my biggest day of trading. I made over $3,000 in one single trade using this strategy. Quite frankly, I wish that I would have seen this video back when I started, because it would have saved me so much time and money. But guess what? Now in this video I'll reveal everything to you in just 3 simple steps. And that being said, let's get into it. Step number 1, understanding order blocks. So obviously before we actually get into the markets where I'm going to show you how you can spot order blocks, we have to understand what is an order block. So order blocks are literally created by smart money, aka big banks, institutions and hedge funds, the ones who actually move the market. They're like footprints that we can trace in the markets. And the reason why these footprints are so powerful is because we can mark them out and wait for the price to come back to it, because usually it will, because it's literally order blocks. There's orders that these big banks, institutions and hedge funds need to fill, and once they return to it, we can scout and make a ton of money. But I'm gonna literally show you soon how you can do that. But first we actually have to understand what causes the order blocks to appear. Order blocks are literally appeared every time there's a break of structure to the upside or downside. If it's a break of structure to the upside, there will be a bullish order block that is the last down candle after the break of structure to the upside. If there is a break of structure to the downside, the last up candle after that will be the bearish order block that the price will retrace to. This bearish candle, this red candle, is our bullish order block, and we can literally see right here that the price returns to the order block and then continues the uptrend right here. But obviously we have to understand what is a break of structure. I'm going to show you quickly in the markets. So in order us to actually understand what is a break of structure to the upside or downside, we obviously first have to understand what is a market trend, because literally market trends are like the lifeblood of market. That's how the markets are built. First of all, we have the uptrend. Uptrend always moves like this. It goes in higher highs, higher lows, higher highs, higher lows, higher highs, right? So obviously here you need to look for buys, because the market will most likely, almost always, continue the trend like this. So you need to look for buys in here. And then there's the downtrend, which moves in lower lows, lower highs, lower lows, lower highs, lower lows. So right here you need to be looking for sells to the downside, because the market moves in trends. It's like a wave. You don't want to go against the wave. When we currently move in an uptrend like this creates our higher highs, higher lows. We have to understand, if this is bullish uptrend, this big move in the trend is called an impulse, and the smaller move of the trend is called a retracement. This is when the price will fix itself and then continue up in the uptrend. Okay, retracement, impulse, and naturally retracement, aka higher low, so aka higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? But that's how we understand the market has to fix itself. That's why it creates the retracement and then impulse, retracement, impulse. It always moves like that. And obviously when we're currently, let's say, in an uptrend like this, we create our higher highs, higher lows, higher highs. The way we actually spot the break of structure is we have to see the retracement. But remember, how do we spot the high? This is going to be our high, because this is a retracement. Higher highs, higher lows, this is going to be high. We want to see a break of structure. But the way we actually spot the high, it has to be like this. This is an up candle, and this is gonna be the down candle. So we're gonna spot the most recent high, and then you want to see literally an up candle close above the high. And remember, high is being created by 2 candles, an up candle followed by a down candle. Every single time frame happens like that. Up candle followed by a down candle. This is our high, like this. This is our high, okay? And a literally a low, same thing. Down candle followed by an up candle. This is the low. Remember, here was an up candle followed by a down candle. This is the high, and this is the low. Okay, this is the low, and this is the high. And the way we actually see the break of structure is like this. Boom, right? This is a high, higher low, boom, and up candle closes above the high. That's the break of structure. Do not make it complicated. It's actually very simple, very, very simple. I'm going to show you in the charts very, very soon. This is a break of structure because this down candle closes below the most recent low, aka the low low, right? A break of structure, BOS, to the upside, right? After that, immediately the bullish order block will be here. After the break of structure, the last down candle in the uptrend is the bullish order block. If you actually want to be patient, you wait for the price to retrace to the order block, take some orders, price want to take the orders, and if the price reacts to that order block, then you're going to look for buys. And obviously in a downtrend, lower lows, lower highs, low lows, low highs, low lows, right? Remember, This is an impulse, retracement, impulse, retracement, impulse. And these two are literally the breakout structures to the downside. And look at this. This is a lower low, lower high, low low, lower high, low low. Since this new lower low closed below this lower low, the retracement, aka the up candle, last up candle after the breakout structure to the downside, will be the bearish order block. Boom, taps into the order block, retraces right here, retracement, impulse. So naturally, as traders, we always want to follow the trend. And when we want to actually use the order blocks in the trend, I go to the 5-minute time frame. It is actually a great time frame to spot them order blocks and then follow the trend. So obviously, we can literally see in the 5-minute time frame, this is our bearish downtrend, right? These are lower lows, lower highs, lower lows, lower highs, and lower lows, right? But then look at this. We create our low low, lower high, and then we consolidate a little bit. Then we break structure to the upside, right? Because this is now our higher high, because it broke structure above this. And now these are uptrend in the 5 minutes. These are higher highs, higher lows, and higher highs. By the way, for the new people, if you actually want to acknowledge which trend are you in currently in the market, you have to see the price respect of the trend. As you can see, it is not anymore respecting this downtrend because it started to create our what? Higher highs, higher lows, higher highs, and it respects it, okay? And you know, naturally, then I'm going to look for buys in here. This was our higher highs, higher lows. So this is a retracement. And after that, we can literally see our high right here because this is a retracement, because a high is being created by an up candle that is then immediately followed by a down candle right there. So this is the high. And after that, the up candle closes above that. So we can potentially look for buys in here, and if you're super patient, you can wait for the order block getting tapped into. Why is this an order block? Because this is a breakout structure, and this is the last down candle after the breakout structure to the upside, right? So this is the bullish order block, and obviously they do not always get tapped into, but if you manage to catch it when it taps into, it's so much better. But you know, let's see, does it happen? Okay, it doesn't, but this is our current new high. So if we break structure right here, this will be the order block, and then we can just ignore this one. Let's see, does it happen? Okay, it doesn't happen yet. We actually create our new high. Why? Because this is an up candle followed by a down candle, so this is a new high. Let's see, does it break structure? It doesn't yet. We actually create our new high right here, up candle followed by a down candle. That's the high. Okay, look at this. This high got just breaking structure. Look at this. This is an up candle followed by a down candle, and then it reaches a little bit consolidation, right? Happens. Then this breakout structure happens right here. This is a BOS, bullish breakout structure. Look at this. This is the last down candle after the breakout structure to the upside. So this is our bullish order block. And if we tap into this order block, since this is the last down candle after the breakout structure to the upside, we can then look for buys immediately. But we'll have to see. Does it get tapped into? All right, look at this. Got tapped into. Now, the thing is, what I want to do in this kind of time frame, I'm in the 5-minute time frame. This is a 5-minute bullish order block. What I want to do naturally in here is, let's go back into the replay mode. Let's go a little further. Once it gets tapped into, I go to the 1-minute time frame, right? Let's see. We have to wait for it to get tapped into. I go to the 1-minute time frame, and the reason why I do this is because I want to get the best possible entry with a good risk-reward ratio. So what I do is I want to see one more breakout structure in the 1-minute time frame. Look at this. This is our most recent high, and we broke structure above it. Now I will place my long position right here, and then I'll put the stop loss right here, and we could potentially target even some higher in here. So this is like almost 1 to 3 risk-reward ratio. We can target some highs in here. Let's see what happens. Let's see. And there we go. Look at this. And you know, as you saw, the trends, they happen in every single time frame. What is this right now? These are higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs, right? So naturally, these trends, they happen in every single time frame, but higher time frames hold more power and influence. That's why I see it in the 5-minute time frame. And then when the 5-minute bullish order block gets tapped into, I go to the 1-minute time frame, see one more breakout structure, and then you just, you know, follow right there. Allow me to show you in the downtrend, because, you know, downtrend, you can look for sells, uptrend, you can look for buys, right? So in this case, we're currently in a nice, very nice downtrend, as you can see. And what is the key? What is the key you want to see? You want to see the respect of the downtrend. Low lows, lower highs, and low lows, right? And look at this. Naturally, this is our low, because this is a down candle followed by an up candle. So this is the low, the most recent low. And then we actually close perfectly to the downside. This is the down candle breaking structure, making sure that this is a breakout structure to the downside in the 5 minutes. Then what is this? This is the last up candle after the breakout structure to the downside. So what is this? They are bearish order block. And if it gets tapped into, that's bonus. Okay, it didn't get tapped into. However, we create our new low. This right here is the lowest point it was, and this is a retracement. So this is a low. Now, if you want to see a breakout structure, you're gonna want to see a down candle close below that, and this would be our potential order block if the break structure nicely. So let's see. Look at this, it broke structure nicely. Look at this. This is a breakout structure to the downside, and naturally, after every breakout structure, there will be an order block. So currently, we broke structure to the downside. What is this? This is literally the last up candle after the breakout structure to the downside. So this is our bearish order block right here. Order block, OB, whatever you want to call it. If it taps into that, we can go to the 1 minute, and then we see 1 minute breakout structure to the downside again. So does it get tapped into? It gets tapped into. Look at this, tapped into nicely. So let's go back. Let's go to the 1 minute time frame when it actually gets tapped into it. Look at this, taps into it. And now, since we tapped into the order block, what do we want to see? We want to see a new low being created, lower low. How can that happen? We need to see a mini retracement, again up candle, and then it's gonna be our low, and then we can break structure. Doesn't happen yet. May take some time. You have to be patient. May take some time. There we go. Look at this, right here. This is our low. Why? Because it is not this one. It is this one, because this is a down candle followed by an up candle. Right there, low, retrace it. If it breaks structure right now, we're gonna take it. There we go. Look at this. We literally can take it now. We literally can enter straight off of here. This is our stop loss above this 1 minute order block, right? Because this is our bullish up candle after the breakout structure to the downside. Because look at this. This is our literally breakout structure. And you may wonder, why is this not the low? Well, because this is our down candle followed by an up candle. This is a retracement. And this is the 1 minute. We already saw the 5 minute order block getting tapped into. Now we want to see the 1 minute BOS to the downside. And if we want to target some stuff, we could potentially target this low right there. And let's see what happens. That's almost nice 1 to 2 reshort ratio. And boom, there we go. We literally tapped into the low right there. And beautiful, 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 beautiful. Amazing. That's how you literally take trades with the order block. So remember, order blocks are literally footprints created by smart money, big banks, institutions, and hedge funds, okay? The ones who actually move the market. The order blocks, we mark them out, and if they get tapped into, wait for the reaction. The key is to always wait for the reaction of the market to the order block, then you're gonna enter. Right, now, you know my secret trading strategy, the order block strategy. Now you want to start making at least $10,000 a month. Since you made it this far, I have a gift for you. So click the subscribe button and then scroll down to the description. It will take you to my free course. It's the first link in the description. It will teach you how to make $10,000 a month consistently with trading. All the secrets about trading, the reason why most people fail, why are these market manipulated, etc., etc. So click the link right there. Thank you for watching. As usual, I'll see you on the other side. Peace out.